What are you trying to achieve at this conference? Are we talking about money transfer, debt forgiveness, or keeping the momentum to really try and do a new Bretton Woods agreement?
I think the key purpose is to keep the momentum and to have a new financial architecture for the poorest countries of the world. With President Macron, we don't want the poorest countries in the world to be confronted to a choice between fighting against extreme poverty and fighting against climate change. We want to provide all the financial means for those countries to be efficient in the fight against poverty and in the fight against climate change. This is the key purpose of this summit, and I think that the key point, the key purpose would be to define a new financial architecture for the 21st century.
Minister, are you frustrated that it's taking this much time? I know the Chinese premier is here, which is a great coup because we haven't actually seen U.S. officials and Chinese officials at this high level in a room together talking about these issues, but you've tried to push also voting rights in the IMF. How's that going?
Big things need a long time, so I'm not frustrated. I think that we are totally determined with President Macron to have a final positive outcome for this summit. I think that we are moving on the right direction as far as debt restructuring is concerned. We want to move faster, we want to move quicker. I think that we could have a positive outcome as far as the debt of Zambia and Sri Lanka is concerned. It is really quite good news to have the Chinese Prime Minister here in Paris today, talking with all the head of states, talking with the Secretary Janet Yellen. This is really, I think, a very positive outcome. We also have the new president of the World Bank, and we are defining a new role for the multilateral development banks, providing more money for the poorest countries. So really things are moving on the right direction, and the final outcome must be positive.
Minister, I imagine that in the corridors they talk about trade. They talk about the fact that Secretary Blinken was in China, the fact that we have President Xi with a rapprochement with the U.S. What does this mean for global growth?
I think it's good news because we all want to improve the relationship between the three continents, between China, the US, Europe. We are totally determined to defend our own economic interests in Europe. You know that the new principle, which is now at the core of the European future, has been defined by President Macron, and it is sovereignty. Sovereignty means that we want to defend our technological assets, our economic interests, while talking with China, but being aware that there is a necessity to really have all the necessary tools to defend our economic interests.
But, Minister, given the high inflation, interest rates rising, I mean, the economy is extremely complex. Do we need to attract, in Europe and in France specifically, more Chinese investments?
Yes, we are open to Chinese investments in France. We had yesterday a very fruitful discussion between Prime Minister of the Chinese Republic and the key CEOs of the French economy, and we made very clear that if there is any willingness of the Chinese government to invest more in France and more in Europe, for instance, on the EVs, on the electric batteries, we are welcoming those investments.
I mean, we have a lot of U.S. viewers at this time in the day. Would they worry that actually that investment that could have gone to the U.S. is going elsewhere, including Europe?
No, I think that, climate change means a lot of new investments in green hydrogen, in batteries, in EVs and so on, solar panels. So there is place for everybody. We should just be very cautious in the way we are defending our technological assets and our technologies, our key technologies. But anyway, the fight against climate change will pave the way for new investments and new innovations. And this is a very good thing that we have fruitful talks and constructive talks between the US, the EU and China.
Minister, how difficult is it to be in charge of finances of a country at a time where interest rates are going up? Inflation, of course, is going up, which leads to higher interest rates. But at the same time, you need to do economies because of huge deficits deficits across the world?
It's a kind of fine-tuning, I would say, which means
Not
that
a
first of
juggling
all,
act?
yeah, no, just a fine-tuning, which means that the key priority is to get rid of inflation and to bring the prices down. This is the key priority for the household, of course. Then you have to take into account the necessity to come back to sound public finances. I just announced last Monday that we would cut in public expenses by 10 billion euros at least for next 2024. So this means that we are totally determined to come back to sound public finances and to stick to the path of reforms. We just introduced two key reforms, the reform of the labour market and of course the pension reform.
But given what we heard from the Fed and other central banks, do you not worry that interest rate hikes will be so severe that they'll almost have to crush economies or at least put them in a recession to achieve their inflation target?
That's why it's so important to keep a high level of investments and a high level of innovation. If you want to avoid recession, you have to find the right balance between coming back to sound public finances and keeping a high level of investments in the fight against climate change and, of course, in defense, since we have war back on the European soil. This is this balance that we want to preserve. You know that we are in the process of defining the new rules for the European countries, the Stability and Growth Pact. We want those new rules to keep the right balance between investments and sound public finances.
Do they need to be more flexible?
We need flexibility, of course. We need rules. We need all the countries to abide by the rules. But let's be very clear. The key factor for the 21st century for Europe is to keep a high level of investment in innovation.